Asian stocks slid along with European and U.S. futures Tuesday on concerns that commodity costs will fan inflation and choke economic growth. Nickel soared past a record $100,000 a ton on a huge short squeeze. An Asian equity gauge dropped for a third session. European contracts shed 3% and U.S. futures dropped about 1%. That followed a 3% drop in the S&P 500 on Monday, the gauge's worst such slide since 2020. Nickel's price doubled on the London Metal Exchange. A unit of China Construction Bank Corporation has been given additional time by the exchange to pay hundreds of millions of dollars of margin calls amid the spike. Oil pushed past $122 a barrel, supported by fears of disarray in commodity flows stemming from the war in Ukraine and sanctions on Russia. The price of everything from natural gas to metals to wheat has hit all-time highs for similar reasons. Treasuries and gold were steady and the dollar rose in a sign that turmoil in commodities is supporting demand for traditional investment havens. In the U.S., lawmakers are moving toward barring imports of Russian oil. Russia for its part threatened to cut natural gas supplies to Europe via the Nord Stream 1 pipeline. That underlines how the conflict and economic warfare against resource-rich Russia are dimming the outlook. Tightening monetary policy to contain inflation presents further challenges. The gap between 2-year and 10-year Treasury yields is around the narrowest since March 2020, a sign of expectations of slowing economic expansion. It's all about slowing growth and rising inflation, Ali Fiodoriwala, Rock Creek co-chief investment officer, said on Bloomberg Television. With the sanctions on Russia intensifying, it's hitting all sectors. Then you are going to have some central bank action amidst uncertain economic growth. Talks between Ukrainian and Russian officials have made limited progress so far on negotiating a ceasefire, but the discussions are expected to continue. Russian President Vladimir Putin said Kyiv must agree to his demands,